Anthony Wilmot, founder of the independent Equity Express Stock Exchange, and whose company Singular Systems was one of the very early supporters of BizNews. Anthony, I'll never forget you for the sponsorship that you gave us. Goodness, we'd only been around a few months, and you said, "I'll take a chance on these guys," and you hopefully you got great value for money back then. But it's always wonderful for a new media company to have that kind of support. But I looked through the archives ahead of this interview, and the last time we had a conversation was in 2017, 6.5 years ago. And the reason then was because your OTC platform, Equity Express, had just been given a license. So it had officially become licensed, 53% black owned, which I think is pretty important in the context of the South African scenario. And it was one of a number of stock exchanges that got new licenses. Now, we knew that the monopoly that the JSE had was going to be affected by the entrance of all these new companies. And indeed, it has been. The JSE's pretty much struggled since then. But what about all the others who've come in? At the time, I recall, there was quite a bit of concern that too many licenses had been issued. Have they all survived?
No, Alec, you're quite right. The first one to get a license after the JSE was Zarix, run by a fellow called Etienne Nel, and unfortunately, they did not survive. Their license was terminated last year. A2X, which became the Cape Town Stock Exchange, and have done a very good job rebranding themselves. They're going along just fine in Cape Town. You might have heard of them. They've certainly been in the media a bit. Ourselves, we're still fine. And the other one, which is probably the one that the JSE has noticed the most, has been A2X. A2X is the stock exchange that effectively dual lists any JSE companies and is competing on price. And their volumes have got substantial. They're doing about 15 billion rand a month. The JSE does that in a day, but when you consider that we do around about 500 million in a year, it shows you how well they've done in terms of growing. But once again, most of their stocks that trade actively are the top 40. I think the biggest problem in the South African stock market right now is the non-top 40. They just seem to be ignored. And with South Africa becoming a challenge from an investment destination perspective, there really is very little money flowing that way. Right now, the mantra is get your money offshore, get your money offshore. And a lot of South African investors and investment houses and pension funds have been doing just that. And certainly it has proven to be a wise investment choice in the last 3 or 4 years. But these things have a habit of changing. And, if we do have an election that results in some movement, because right now it feels like there's a lot of stasis with what's happening with our politics, I think it will be positive.
Well, there's no doubt that the election will be ushering in a new era, a coalition government. However you want to look at it, whether the coalition that you like or don't like is the one that comes in, there is going to be change. But as far as Equity Express is concerned, and you are rebranding, so that's the reason we're having this conversation today. But as far as you guys are concerned, you came to the forefront because you offered something very different to what the others are. And particularly when you've given us those turnover figures, clearly you'd have to have a particular niche. Just remind those who didn't watch that interview of ours 6.5 years ago what it is exactly that you're offering that is so different.
So we started our life as a PE exchange, hence our shareholding. We look after, which I still think is arguably the most successful PE transaction in the country, which is multi-choice Minati. And that at that time, we also looked after Media 24's Welcome Uzani, but they have since liquidated that scheme. And Singular Systems have recently won as a broker, and this count will be listing not next year, but the following year, Old Mutual's BE scheme. So those have been successful. And more recently, from April, we'll be looking after, on a hosted basis, the share scheme for MTN Zakhele. So we are still really the home of BE schemes. But what has happened is we got our bonds and notes license last year, February. We then collaborated with Straight and effectively developed a platform that allows people that are familiar with the Straight's unlisted bond trading platform to list on our market. So we've piggybacked effectively off them on some of their technology and integrated the systems between our two organizations seamlessly. So that we see as being quite interesting. And we were very excited. Our first bond came to the market in last year in December for about 220 million. And we've just had a tap issue of another 40 million. And I'm seeing quite a lot of activity in the bond space. Yields are really quite good on SA bonds at the moment. And a lot of corporates are wanting to borrow money. Most bonds are held to maturity, so they're not actually held to be traded. But certainly a lot of investment houses won't touch a bond that's not listed. So we're seeing definite movement in that space. And for us, that's exciting. On the equity front, we've got the most number of listings we've ever had, with 9 at the moment. And we've got 5 hosted counters. Now, a hosted counter is a JSE listed counter that is not secondary listed in our exchange. We've effectively got permission from the issuer to allow our investors, the BE investors primarily, to invest in these JSE shares through our platform. So they don't have to open another stockbroking account with a JSE registered broker, because the trading on the JSE is done through a prime broker of the JSE through our integration directly into the JSE systems. So in essence, what we've, and that's the reason for the rebrand, we've rebranded ourselves the integrated exchange because of our deep integration with both Straight and the other exchanges that have listings. And we've also found that we had been confused quite a lot with EESE Equities. That's the Purple Capital's retail offering. And since most of our investors are retail offerings, we felt it was probably a good time to change the name, simply because there is no link between our two organizations. And we wanted to remove any sense of confusion to the extent that there remain confusion on that point.
EESE. I suppose it's easy enough to get that a little confused.
Confused with EESE Equities.
Securities Exchange.
Yeah. So
not difficult, but an interesting name. Where did that come from?
Well, the integrated exchange just came from the fact that we've done all this integration, and we just felt that as time goes on, more and more people are saying, can I do things once and not have to do things twice? So a few of the things we've done in our exchange that we see as deep integration, all our FICA documentation that is done by our brokers is shared between the broker community. So you don't have to FICA more than twice. Now you can buy shares in a pre-funded, because we're a T0 exchange, so everything's pre-funded. You can buy shares on a pre-funded basis directly on counters that are listed on the JSE, which makes that easier for these people. We're still, I think now, the only exchange, or I'm not sure, maybe Cape Town doesn't, I'm not 100% sure, but we charge our investors nothing to have an account with us. You might have seen in the news that EESE Equities levied a fee of 20 Rand per month. And whilst that might not sound like much, when you multiply how many shareholders they have or how many investors they have, we have over 100,000 investors on our exchange. So that would equate to a meaningful amount of money if we decided to do that. But at this stage, there's no intention to do that. Our business thesis or business cases, you'll pay fees when you transact on the exchange, but holding your assets, it doesn't cost you anything.
You're a tech guy, Anthony. That's your background. Singular Systems, a very successful technology company. It's often bothered me that when you create the tech, as the banks do, as financial services companies do, well, then it's there. And to transact with created technology doesn't cost anything. Yet, the many financial services companies see it as an opportunity to levy charges. Has that played anything? I mean, for instance, if those 100,000 account holders were costing you money just having their accounts with you, then you would understand, yes, you must charge them. But if they aren't costing you money, then presumably that's part of your whole thinking there, that you only charge when they transact.
Well, most of the expenses in terms of running the business, let's talk the broader business, because the average investor doesn't really distinguish between the broker and the exchange. We, in terms of the FMA, can only provide the platform. We can't interact with the investors at all. So we have no relationship with the investors. The only difference on our exchange is, if you can picture opening an account with a JSE broker, Every broker that you open an account with gives you a different account number, and you're in the system many times. So if Alec has got an account with FB Securities and with Sasfin and with a third-party player, Alec would have 2 different sets of accounts. And each broker wouldn't know anything else about Alec because they see Alec once off. We've changed that. Ours is a centralized system. So you have one account, and if you bought a share through 2 different brokers, you still only end up with one account. We account for which transactions were done by which broker, but we keep it all separate. So the brokers are the people that have to man the call centers and have to, do the FICA and go and collect the cash to make sure that the account is pre-funded and all that sort of stuff. So the bulk of the expenses from day-to-day running costs are with the broker. The exchange is lucky in that we bought the software. We still have an annual license fee that we pay for Singular because good software is always maintained, otherwise you throw it away. So there is an ongoing software cost. But we are lucky in that the volumes that we trade on our markets are sufficient to meet most of our needs. And we were well capitalized from the beginning. So it is certainly not a highly profitable business. I've certainly made money in my other businesses more easily than I have at the exchange. But I see it as a public service. And you must also remember that it was done to provide the BE or the Patu Minority investors a continuation of what they were used to. What I have learned is change when you've got lots and lots of investors is difficult. I mean, just going through this rebrand, the amount of work we had to do to change everything on the site to now read the integrated exchange, all the SMSs go out in the name of the integrated exchange, and convince investors that we weren't a scam. So we put in our whole procedure in place of opening the new websites up a month before and saying, because now instead of going to www.ease.goza, you go to www.i-ex.goza. People are there have been so many examples of phishing scams and people thinking they're dealing with a reputable organization on a website, but they've been scammed. We just couldn't afford for that to happen at all. So it was quite a campaign in terms of emails and quite a big LinkedIn marketing effort as well to inform everybody of the change. So yes, you are right. We don't have the same holding costs as other organizations. And because our tech is stable and has been with us for some time, it's not crippling as it might be for some other financial institutions that often have a change in CIO and the new CIO says, the old tech we had is no good, let's do it again. Building tech is not for free. I mean, it doesn't come for free. But since I was so involved in the technology build of this platform, I still believe it's very much fit for purpose in terms of where we are.
What about expanding outside of the BEE space? And what I mean by this is take a company like ours, like BizNews. I certainly don't want to have, I've been there, done that, competitors, people I don't want to have shareholders in the company. And if there was a way of saying maybe maximum shareholding of 5% per shareholder, per individual shareholder, I might then say, well, maybe we should list it. Maybe we should allow our community to get involved. So you can't get, I mean, surely with your system, that's got to be an opportunity.
Well, that's exactly the requirement of multi-jurisdiction Patu Minority. Nobody's allowed to own more than 10%. So everything in our world is pre-vetted. So there can never be a transaction we have to undo because a rule is broken. Now, let me explain exactly what I mean by that. Firstly, there must be cash in the account for the buyer to buy. Secondly, the guy selling has to have script in the account. So in our exchange, there's no short selling. There's none of that sort of stuff going on. But most importantly, we sit on the entire register. So at the time you place the order, so let's say BizNews did want to list, I would see, would this order take you over the 5% threshold? And if the answer to that question was yes, the system wouldn't accept the order. It wouldn't allow you to even place it in the market. So that's how we do it. And then the other good news is we had a client in the old days when we were still OTC, which is TWK. It was a company that was a corporacy, and they said that only farmers could buy shares. Now, Alec, I don't know what a farmer is any more than maybe you do. But you and I will agree that somebody that plows the fields on a tractor is more likely to be a farmer than that's somebody that sits in Sandton and has a farming operation. The point is, we said to them, well, what are farmers? They said, we know what farmers are. So there's a classic example of putting in a restriction saying only farmers can do it. So practically how we enforce that rule, every new shareholder, because a shareholder has to first fill out their FICA and give the broker all their details, is company secretary of that organization to say, here's a man who claims to be a farmer. Will you allow him to buy your shares? So we have seen ourselves as a stock exchange allowing restrictions that's built into our rules. We're allowed to issue companies with restrictions, and who may be a shareholder is one of the restrictions that is easily enforced, in that the broker doesn't generally make the decision in the shareholders. It's the company themselves. So if you do have a privately listed company and you wanted your shares to have the ability to trade, because what is often a problem for a lot of companies is it's just a pain. It sits on the company secretary's desk, and every time there's a transaction, he's going to make sure that the buyer has paid the seller and the seller's happy and the money's flowed. Whereas all that is effectively taken away from you, and it's handled seamlessly by the exchange, and you can enforce any rules you like. The other feature that we're very proud of, we also have confidential listings. So you are allowed, if you, at the time of listing, state that all your shareholders have access to the documentation, to password protect your documents, and effectively be listed on a confidential basis. So you're not hidden, you're on our list. You are a listed company like all the others. The only difference is not every Tom, Dick, and Harry can read all the information that you put up on the website, because JSE have their Sens platform. We have our own platform, which allows investors to lodge all their documents and keep everything available for the investment community.
I'm sure there's a very big market opportunity given where South Africa is going, where you need smaller businesses coming through, entrepreneurs coming through. And at the moment, an entrepreneur's only exit seems to be selling to, I don't know, a bigger company or to somebody else rather than developing the company over a period of time. But Anthony, what's the volume like? Shall we call it the integrated exchange now? What are the volumes like at the integrated exchange?
Okay, so our volumes have been fairly similar over the last 3 years. We've seen the number of trades fall off, but we also have the facility to do a block trade. So our broker has the ability to find a buyer and a seller with a large chunk of shares. And our biggest one we've done for many years, was actually announced before the trade even took place, was done by Brimstone. Brimstone sold 100 million rands worth of consumer shares in February. And that's been the biggest single trade we've done in a while. So this year we're going to do around about 450 million rands worth. I would love to see that number start creeping up more towards the billion mark. But the volumes everywhere are down. I don't know if you've seen the JSE share price. It's basically halved in the last 18 months. So it gives you an indication how much money is actually just flowing offshore. And South African shares, if you actually don't believe we're a complete basket case, represent enormous value. They really do. By international standards, they are incredibly cheap. I mean, when you can buy a bank in South Africa at the same yield as their preference share, I mean, it's a bit of a no-brainer why I think the bank share, because it does really have upside. So a lot of these banks are on 7-8% dividend yields. And I mean, that is keeping pace with inflation. Inflation right now is at 5-odd%. That's the official statistics. You're getting a real return by just owning a share and just taking the yield. So I don't know. You're certainly not seeing those sorts of yields anywhere else in the world. So I just think as soon as a semblance of confidence comes back, you might see a nice 50% pickup in our market. In all the counters that haven't been favored, yes, we've got the Richmonds and those, but those are internationally priced. So they've been following what's happening internationally. But the local ones I'm talking about are the neglected ones. And that's why I feel very sorry for the small market cap companies, because the local investor base don't even really cover them. A case in point, Vunani unbundled some of their assets into Vunani Capital Partners from their JSE listed Vunani Group. They decided to list their counter on our exchange. In the time that they've been listed, we've tripled the number of shareholders that they've got, and they've been out trading on our market the Vunani share listed on the JSE. And what's even been more encouraging, the CEO of Vunani, Ethan Dupi, was so happy with it that we now host Vunani Limited. And I haven't got the figures all in front of me, but my sense is that we're doing better for Vunani Limited, hosted on our exchange with trading activity that's happening on the JSE. These small caps are just ignored because nobody's buying them. And the retail investor base in the JSE, not quite, but has largely disappeared. I would say that easy equities are by far the broker with the most number of retail clients. So it's a very interesting space.
Fascinating story. And just to reiterate what Anthony was saying, I did some work on Nedbank this week after the results were released. And they are sitting now, this is their year-end results to December last year. They're sitting now on the last year's dividend, on a dividend yield of 8.5%, projecting double-digit growth this year. If you're not going to get that kind of juicy return pretty much anywhere else on the South African market, but certainly anywhere else in the world. Anthony Wilmot is the founder of the Independent Equity Express Stock Exchange, now called the Integrated Exchange. And I'm Alec Hogg from biznews.com.